Today is the day you all been waiting for, and I don't think it is the NCAA championships tonight. It's the Q2 preview with Joel and Dennis, 10 a.m. Tune in to premarketprep.com. In the meantime, we got a lot to discuss today. Crude, surprise OPEC production cut. That's trading up 5 sticks. WWE's doing a merger, but that's trading lower. We got some Tesla delivery news, Medicare news. We got so much to cover. I'm going to be quiet. We're going to start this show.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Conan.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, good morning, traders and investors. Let's go right to the big board S&P futures. After that strong close, we're giving back 5 handles at 32.75. The buck is down a dime, 102, 102.08 and a half, trying to find support here. Bonds are barely moving. They're traded down a few ticks at 131. Crude oil up $5 in the 80 handle at 80.68. What a big move there. We'll go into that in more detail. Gold up $10.01, 1996.30, hovering near that 2,000 level. I've never seen it hang here this long. And silver trying to stay in that 24 handle. That's up just about a penny here at 24.16 and a half. And Bitcoin, that's down $245 at 28,495. We're going to bring in Triple D here, and Triple D. We got a lot to cover today. Just real quickly before we go to the stocks and the news, I had Michael Pachter on the closing print on Friday. Dennis, and I know you love his opinions. He sticks with them for a long time.
Yeah.
And 2 stocks we focused on, so jot these down. Unity. I pulled the chart up on Unity, and that had a good day. I know Mitch was happy about that. But basically, Unity and AppLovin. APP, buy the dip on these. Basically, Dennis, his thesis is, with advertising, the advertising dollar are going to go more to mobile and mobile games. The TV revenue for advertising is still, huge, but he's looking for a flow in these stocks. And you guys got to go back and listen to the clip. He just had some price targets on here that are way up there. So I know he's been bullish for a long time. They've been down, but Dennis, either of these stocks in your portfolio or on your radar?
I got an invader here again. Just hang on.
Invaders.
Boy's looking for his watch. So
I'll mention first if you want, Dennis.
Go, Mitch.
You can find the watch. Find the watch. I'll talk about Unity right quick.
Might have to lock on that door.
But definitely I'm going to be looking at Unity. I don't know much about AppLovin, so I won't say too much about AppLovin, but at least Unity-wise, I could see growth stocks starting to get a lift, right? We had this talk with Mark Chaikin when he was on, right? He started calling out that he could see some of these starting to get moving. I started looking in the ditches, right? What growth stocks haven't gotten moving?
Good call.
And one of those was Unity. So that's why as soon as it started breaking through the kind of the first 30 break right there, I grabbed it at 30.05. And I wanted to add to this name, but it never came back down. It never gave me the chance to add after that. It just ran. And of course, as soon as it got to some certain profit takes, I had to take profits. I was getting close to 10% on this name in one day. So of course I took some profits.
Sold it all? You sold it already?
I took a tiny. I had the tiniest runner
tiny
left.
Piece left.
Yeah, I had to take the money and run. This is the type of market.
It's the Steve Miller Band market. I still think it's that. Take the money and run, because I still think we have a lot of chop, and I know we've come up a long ways on a lot of stocks. People are like, yeah, the new bull market's coming. This has been a pretty good bull market here in the last 2 weeks, I'll tell you that much. It's been a pretty good pop here. We're coming into earnings season, which is a crapshoot. Maybe they're going to blow it away. Maybe the companies are going to blow it away. Maybe it's going to be the silver lining market, but still lots of unknowns. I think you take the money and run too here, Mitch.
Yeah, I think that, you know,
And
in
overall stocks, that is.
in overall, yeah, overall
Yeah.
stocks right now, we need to be thinking of how much profit can you really get? Because some people are probably holding on to their gains here and thinking that the market can keep rocketing. And I do think that that is something that can happen. But like always, we need to understand where our profit take, because this market loves to take back these profits. And if you hang around for too long, a lot of times you get cut out of this market.
Interesting end of the quarter. I
Yeah.
mean, no end, you can't, and I think, by waiting to do my longer term analysis at the end of the quarter, definitely missed out on a good rally.
Yeah.
Well, long term portfolio always catches it, but shorter term, not as much. Two numbers. There's an X number, and I'll give you that one. That's Friday's close. I mean, that was the end of the quarter close, is where a lot of people are marked, and struggling with it a little bit this morning. It's still early in the session, but I think that that's a big number. And then I got a, I got a number on the downside. I'm not going to reveal it yet till we get there, but I can't be stubborn right now that, the numbers are indicating, higher prices from that strong move at the end of the quarter. So, not going to fight the tape, though I probably will a little bit anyways. But strong end of the quarter. I mean, any way you crack it up, and it was the big boys that led us to the promised land. So, man, if they keep going, it'll be surprising. Earnings season will determine that. But
Let,
we
let's
OPEC.
back up and let's just give a perspective, though, here, because we had a lot of people, saying JC Peretz is chanting that we're in a bull market here. We are in certain markets for sure. Europe, he keeps talking about. Europe has been taking off. We've been talking about the relative strength in Europe. It has been very impressive. You can look at the VGK if you want. There's three good ETFs. There's EFA, there's IEFA, and there's VGK ETFs that trade over here if you're looking from the ETF perspective. And there's no doubt Europe has come back significantly from those October lows and is trying to break out here again. We know IWM has lagged. We've talked about that, but let's just bring it to the S&P. And let's look a year and a half ago where we were on the SPY. And I tweeted this out as well. I mean, go back a year and a half, go back, you can even go further back than that. We're basically kind of still stuck in this range here, Joel. I mean, we can get bullish and we can say, yeah, rah, rah, bull, bull. But really, we have been stuck in the same SPY range here for a long time. Like, draw a line right through the middle of all that. I mean, you're talking about June of 2021, we have gone basically nowhere. We've been up, we've been down, we've been up, we've been down, we've been up, we've been down. It's not even like we've been straight down. We've just chopped around this 400 SPY for a long time. Why can't that continue? Why can't we just be range bound? Before the bank crisis started, that's what I was calling for. I was calling for sideways market. And then the banking crisis started to happen in the regionals, and then I got spooked. And obviously, I had some covered calls, and I sold the stocks covered in the calls, and and I've raised a lot of cash. But I mean, even in the absence of more bank crises here, we've been in a range for a long time. I think valuation just says, maybe we just kind of stay in this range. Why do we have to go back to all-time highs? People say every 20 months you go back. I don't know why we have to do that. But if you're arguing we're in a bull market in the USA, IWM will tell you otherwise. S&P will probably tell you otherwise. It's a sideways market. Qs now have turned, and the Qs, I would argue, are looking the best. And I'm going to continue to say, to Money Mitch's point earlier in the show, I think tech is still the best place to be. Now that we've seen the problems with the banks, now that, valuations have come in tech, I'm not saying we're jumping and chasing Microsoft here, and maybe it's nuts on the mega cap tech, but I like what Mitch is doing. What tech hasn't gone yet? Some of these growthy names. We talked with Mark Chaikin on this show last week, about ARKK. And I'm like, you know what? Some of these ARKK stocks actually look like they're setting up pretty well. And look what's happened in 2 days since Chaikin was on this show. Good call, Mark. Some of those stocks have been excellent. He talked about Airbnb at 118. It's 123. We said we liked that chart too. The setups were there. I see what Money Mitch was looking at in Unity, all bunched up there at 30 and itching to go. So, I mean, the narrative here, we have a lull before earnings season. We have another week here yet. The narrative here, I think some of those little growthy tech names that haven't went, maybe that's where you're looking. But overall, we're still in the market, the Steve Miller band market. Take the money and run.
Yeah, it has been that market, but now I'm going to be at least on the other side, a little bit on the coin, of course, and I'll bring in a little bit of some comments here to kind of what has been looked upon, right? Everyone's been talking about the banking crisis. JP Morgan traders coming in saying today that the market has moved on from the banking crisis. Given the recovery in risk assets, the market seemingly moved on from the banking crisis and back to a macro trading environment. The lack of April Fed meeting puts additional emphasis on April data prints as we kick off earnings in less than 2 weeks. It's reported by CNBC. So I would have to go ahead and say here, at least, yeah. I mean, you can say that we're in a sideways market, but at least the recent price action really starts putting us closer towards a kind of almost breakout. I mean, at least from my charts, we're breaking through a trend now and really approaching towards what would be a new bull market.
Which are you looking at though?
Just a
Because certain
SPY
charts will
overall,
tell you
S&P
different
500.
stories.
Yeah, the S&P 500 overall. And if we want, just because I know I draw like kind of the lines on it really quickly, I'll just throw up my charts to kind of explain it, right?
We're in a rate, but still, I mean, breaking out to new all-time high. I mean, I can see, the move up to like 420 here, and I just
Yes,
had
that's
the weekly up
exactly.
there.
Yeah.
Okay, I mean, that's still, and I looked at the S&P high for the quarter. I mean, we had a strong end of the quarter. We still are 100 handles away from, the high from last quarter, that February high, and I don't see it the next 100 handles being like the last 100 handles with earnings coming up. There's gonna be some doozies in there, and then also alluding to that number that we got on Friday. Yeah, it was good. Was it great? Have we licked inflation? Now you get crude up $5. I mean, I just think it's going to be
Good
a
point here
lot
too.
tougher.
Bring us to the crude.
Yeah, yeah. Why
Th-
don't we go
This
to the crude
this
here?
is not helping inflation. This is not going
No.
to ease the Fed's concerns here. This
Yeah,
oil
let's go
price here
to it.
today is skyrocketing. Mitch, what was the news here?
All right, oil prices surge after OPEC Plus announced that it was slashing output by 1.16 million barrels per day. Voluntary cuts would start in May and end in 23. Saudi Arabia announced saying that it was a precautionary measure targeted towards stabilizing the oil market. And so here's where it gets interesting, because Goldman Sachs has had a forecast for a while now that we'd go back to 95 and 100, and they're sticking to it now. They actually lifted it to 95 a barrel by the end of the year and 100 for 2024. Now, another thing that I think is interesting is what could be happening here. I did hear comments, and this was by the president of Rapsiden Energy Group. He stated that they're looking into the second half of the year and deciding that they don't want to relive 2008. Why? Because in 2008, oil prices came crashing from $140 a barrel to $35 a barrel in 6 months. So what do you guys think here? You guys traded that time. I know I wasn't around on 2008 trading, but let me know. What do you guys think?
I just think that oil was beat up very badly. Obviously, we know we've been playing the oxy because of the Buffett area. I mean, that has worked very well from a day trading perspective, from a swing trading perspective, from a long-term perspective right now, because I'm up 14% on my long-term shares too. I mean, sometimes it's just about low-hanging fruit. We kind of knew Buffett was going to step in that area. And Oxy, yes, it breached it a little bit, 55 or 56, almost down to $55. But overall here, OXY has just held up very well. I think, we just look at valuations here in oil, and they're just so low at this point in time. I mean, Chevron, we've talked about this too. I was probably early because I was saying the 160 probably looks pretty good when they're doing that kind of a buyback. It went down to 150. Everything, timing is everything, so you never get it perfect. Now it's back up at 169. I think on pullbacks you buy, the one problem is you can't chase them today. So people are going to come in. They're like, okay, yeah, we're going to 100. I'm buying oil stocks. And this is the people who are going to lose money. You can't be buying rips 5, 6, 7%. You got to be waiting for the pullback. And I just think we're still in that market. I'm just not buying rips. So I still like oil going forward here. I just think today's not the day to buy when it's out. USO is up 6%.
Yeah, getting a boost here. I mean, if we did the history, if we ran look back at like these OPEC cuts and the timing of it is just kind of a little bit, we got a good inflation number, it's kind of like us against the world. So when the world could stick it to us, they can. And that's basically what they're doing with this cut. I think you'll look at this and look at the opportunities and numbers. You'll go up for a couple days or two, but I think historical references will say that it'll be back at $75 next week. The timing of this, I don't know if there's an exact rollover going on or what's going on, but when you have, it's the most manipulated market in the world. You can do things like this and have this kind of price action. So, it had a dip, and you think they're cutting? They're pumping. That's the thing. You wait for the inventory numbers to come out in the next couple of weeks. There's not going to be any cuts. They're calling people in to work overtime. But with that being said, it's up 468 over $80 in the $80 handle. So you can't argue with price. There's nothing.
We've come all the way back in the range. This
Yeah.
is what the bulls have been citing. Look at the commodity prices. Look at oil, and they keep going to oil. And 2 weeks ago, they're like, you got to buy stocks because we have massive deflation happening in oil. Well, all of a sudden, that deflation is gone because we just went from 66 to 80. So, this hits consumers directly at the pumps. So that's a consideration here for your tech stocks as well. And I don't think it's surprising here. I don't think it's actually surprising. We just said, I still think tech is good. Some of these growthy names that haven't went yet. But to Spinner's point in the chat, and it's a good one, I'm not chasing Microsoft up here at near a 52-week high.
A pullback.
I'm not chasing Apple up here near a 52-week high. And is it all the ducks in a row here? Because if you're just looking at mega cap tech, everybody has flocked there. That's not the tech that Mitch was talking about. He was talking about the ones that hadn't gone. He was talking about a catch-up trade. There's no catch-up trade in Apple. There's no catch-up trade in Microsoft here right now. This is the reason that maybe you were buying a Unity, saying there could be a catch-up trade with some of these smaller names compared to the outperformance of those mega cap tech names. But again, if you're coming in buying mega cap tech now, the valuation 25 times earnings on Apple.
Yeah, you have to have a really tight
Here's
one.
your ducks in a row. Is you had an end of the quarter, which often stocks get jacked in the end of the quarter, which Joel predicted on this show on Wednesday, and then we went up for 3 straight days. Joel Alcon with a fabulous.
Well,
call.
every money manager wanted to say they had those tech stocks, right?
Yeah, there you go. It's the window dressing at the end of the quarter. Oh, look at us. We're in Apple.
Look at
Microsoft.
these.
We're in all these good names. Here you can see them. Yeah, they bought them all right at the top. They just did here. So again, I don't think it's surprising with oil ripping like this that we're actually seeing some of the mega cap names like Apple having a pretty rough morning. So S&P's down 0.21%, and the QQQ again, they're following that. QQQ is definitely underperforming here today. So there's an inverse correlation between oil and tech stocks right now. Don't kid yourself.
And I think one thing that's interesting is I know that for a long time you could say that majority was bearish. Is majority still bearish, team?
I don't think so.
No, I think they're starting to be like, yeah, I'm going. Tech is the move. Let's go. So we got to be careful with that one, right? The market loves to do the Max Payne trade. So
one thing to consider, I don't think they turn around and just crash these names. And the simple reason for that is there's just underneath demand.
A lot of money behind
trades. I've missed these trades. I sold my Microsoft and Apple lower than here now, where I was doing very well. I'd sold Microsoft, I believe, in the middle of 2022 at 270. Now I look at it 285. I didn't rebuy at 220. I didn't rebuy at 230. I didn't rebuy at 240. And it's like, here's the same problem. I timed the sell-off pretty well, get out in time, but I don't rebuy.
Hard, man. It's so hard.
I don't rebuy.
It's so hard to do. It's such a hard thing to do.
And Kramer makes that point all the time. You can time it well, but you don't rebuy. What good is it? It's a good point.
All right, let's keep going. Let's go to Tesla. Let's do Tesla deliveries. Let's get into that action. Let's see how that dragon's doing. Of course, that didn't have too bad of a Friday. Keeping an eye on Tesla to see if we get, really above that 200 again, right? We're right on it right now. On Friday, we were a little bit above that They posted first quarter vehicle production and deliveries. Delivery in Q1 came in 422,875 vehicles compared to the expectation of 432,000 vehicles for the quarter. So slight miss there on deliveries. When we look at the comparables, 36% increase in deliveries comparable to the year-over-year number, 4% growth compared to last quarter of 2022. One thing that I thought was really interesting is they are not including the production and delivery numbers of its heavy-duty semi-truck. This is one thing that I think a lot
I don't think
of
anyone's buying them, but there's getting
Yeah,
hit.
no
It's
one's paying
getting hit. It's
attention to
down
them.
$7.50. And what I think you got to focus on this one is that a lot of people got caught in this thing on Friday, right? You finally got that breakout over 200. They're throwing some shares around, right? 5 million shares have traded already. This is there is some serious selling going on here. But as much as the sell is going on, you haven't taken out Friday's low. Friday's low was 197.20. So, it's bad news. People love to buy the dip in Tesla, but I'd like to see let's keep an eye on Friday's low. And then also moving forward, a better number for you is going to be is that close from Friday, that mark 207.46. That's where people marked it at the end of the quarter, and 207.79. So they love to come in and buy the dip in Tesla. We'll see if it holds, the previous day's low, but that 207.46 is looming large here. That closing price from Friday.
Yeah, I can't. I don't know if they're just going to hammer this thing either. The problem is all these stocks have underneath demand. There's all people who have missed it, so it's hard to just get full on rah bearish tech. But we've come too far. It needs a cool off. All these stocks need to cool it a little bit. That's what I would say. A little bit of short-term irrational exuberance. Cool off a little bit. Maybe we get a cooling week for tech. I don't think we're turning around and just, tech's going to be hated and this sell it all. I don't think that's the market.
All right, we'll go to the next stocks. There was some China EVs, but just keep those on the radar. They put out some deliveries today, but I think Tesla will drive the boat there. Let's go to McDonald's, as McDonald's temporarily shuts office, preparing for some layoffs here. And will this continue to be a positive catalyst for stocks, the layoffs? You guys think it's just going to continue to be like that?
I'll just talk in general. I have a trading position on McDonald's, so I won't talk McDonald's, but I'll just talk in general. That this silver lining of laying people off is the way to go. I mean, I joked with Meta saying if they continue to lay off at this rate, they'll have 0 employees and they'll be the most valuable company in the world. And obviously that doesn't make sense. So at a certain point, it's a tipping point. They're cutting the fat. Cutting the fat is good, and that's McDonald's cutting the fat. I guess that's a joke. Cutting the fat though in these stocks is a good thing if it's but at the same time, those gains only last for so long. And the reason, you're seeing a lot of the fat get cut is because a lot of these companies are actually calling for tougher times ahead. See how this earnings season goes. That's what I'm curious about. Let's really see how this earnings season goes.
So what do you mean? Like the corporate office, they're like
corporate office are shutting down and preparing for layoffs, and majority
so
of
they
the
shut
workers,
down. Like you don't have to, if you work at McDonald's, you don't have to go to work today.
It's corporate
majority
office,
of corporate workers and remote workers. Majority of these are already working remote, so they're just working today. They're just waiting to find out if they're getting their jobs cut.
They're getting booted. Man, this thing is right near an all-time high. I mean, it just went from 260 to 280 in March. I mean, right near the all-time high. If 281.67 was your all-time high in November. You may have had a nice move on Friday. If this is good news, you got the 280.64. I mean, wait for the breakout here. But right now, this has been, it's been monthly resistance, a great run. I certainly can't buy it off this news, and just wait for your target. First things first, let's see if it could get to Friday's high, 280.64. Actually had a pretty tight range on Friday. So let's see the parameters from Friday's range. Taking it above 280.64. Get an all-time high, and you take out 278.50. Maybe got some work to do on the downside. I will note on the downside, the only doubled high or low is the pair of lows at 276.50 in Mickey D's, if you're looking for more on the downside.
All right, let's go to the Medicare news here. Medicare insurance underperforms as COVID protection lapse for million. It looks like up to 15 million Americans are hanging in the balance to find out if they'll get Medicaid now, as the pandemic era protection comes to a rest here after 3 years without reapplying has now expired. You would need to reapply.
This was a headline that was driving stock prices, the whole entire Medicare, like UNH, CVS, CNC, Humana,
CVS,
Friday
yeah.
night. That continues here this morning. Humana is the biggest gainer here, up 16 points on this news. You can also go, obviously, UNH of trading position. UNH, it's up 14. CVS, it's up $1.24, which obviously is a lot more things than just it's not a direct.
What about the one that
exposure.
I like, ELV? I don't think you got a position on that one.
No, I don't. ELV is up $9 as well. So you got big moves in these things. One thing I will say is when we had the bad, do you remember this about 3 months ago?
Yeah.
We had the Medicare news that wasn't good, and all these things got hit really hard on it, and they all bounced right back. I think you could actually see the opposite trade happen here, where all these things are rip roaring and rallying the pre-market, and we look at these things in 2 days and they sell back off. So I do think in this case of, of Humana and some of these stocks here, I do think it's a selling opportunity.
Nice pops here. I mean, the Humana pop at 505. Only a couple thousand shares are traded, so no one's making a move. If in fact you could get to this 505 area, this 510 area looks really juicy. Going back all the way to February, 510 to 512. So until you can break out of that area, I think the pressure is still on these stocks. I don't know how much they're going to hit it off this news. 490.67. That's $12 away. That's the top of the previous day's range. And I think I kind of agree with you. I mean, they're holding up. This one is still bid right here near the highs of the pre-market session. 11,000 shares have traded. What was your high from last week? 486.29 right there. Yeah, let's see. See if you can get a strong bid at 486 and work your way closer to 500. But big pops. They did hold up over that 4 a.m. open. So keep an eye on your pre-market highs on this and looking for follow through.
All right. Well, I've been waiting for this one all morning long. Let's get to it. WWE getting sold out there, baby. John Cena. Let's talk a little bit about what's going on.
For that for sure.
WWE agreeing to merge with UFC as a part of a deal with Endeavor Group here. Of course, they already own UFC. And so Ari Emanuel now owns a majority stake in the new company. Endeavor will own 51% stake in the new combat sport and entertainment company, while WWE shareholders will have the remaining 49%. According to the terms in the agreement, this valued WWE at $9.3 billion and UFC combined, right? And Endeavor now at $12.1 billion, said the companies in a press release. So what do you guys think about this?
Well,
Finally,
I think
Vince
everybody
got out.
Everybody who was sitting around here very excited for a potential merger is probably disappointed here this morning with the price action. Somebody was saying, I never looked. I was busy this morning. I haven't crunched any of the numbers here. Someone was saying it equates to a $103 price target for WWE. I can't confirm that because I haven't. I've seen that in multiple places though. Obviously risk arbs here are looking at a different situation here, and arbitrage traders are saying there's no 103 coming anytime soon because the stock's trading at $86. I mean, they figure this stuff out pretty fast. Maybe there's some, antitrust issues, but maybe, when you're calculating it out, it's an all stock deal. You're going to merge two companies. You got to figure out all the math there too. So it's not a simple look at the price and go. So there's a little bit of math to happen here, which maybe I'll do later today, but I didn't have time this morning. Either way, those risk arbs are pretty good at it. So they're saying there's definitely, down $5 here on a takeover. It's never something you want to see.
Are they bringing back Dick the Bruiser is what I want to know.
Jimmy Superfly Snuka? Remember him? Jake the Snake was good too.
I just want to go back to the Rock and Stone Cold Steve Austin.
You know what? This is
George the Animal Steel. Wrestling was better in the 80s. You're right, Joel. Wrestling was better in the 80s.
Nah, man.
The Sheik. Remember the Sheik?
The Iron Sheik. Yep, the Iron Sheik.
Come on,
Nikolai
man.
Volkov.
The Undertaker. Stone Cold Steve Austin.
The Undertaker was at the
Kane.
90s, though. No,
Come
it's
on,
Steve
man.
Austin. It was
I
overrated.
don't
You still
understand.
can't
what
beat
The
Hulk
that is.
Hogan. He made
Come
the
on,
wrestling. He was going
man.
out there. The Ultimate Warrior.
You guys
Randy
didn't
Macho Man
you guys
Savage.
didn't have, you know, the dead or alive matches back in the day with Undertaker and
Ric
Kane.
Flair.
Come on,
Oh yeah,
man.
we haven't done our Ric
Mitch, you're
Flair.
too young. You just don't appreciate the good times back that we had when we
That's
watched.
what it
I
is.
was religious. Like when me and my dad would sit there and watch WWE every Saturday morning, religiously from when I was like probably like 5 years old till I was at least 12. And it was awesome. I loved all the main events, you know, when Hulk Hogan body slammed Andre the Giant and at the Pontiac Silverdome in Detroit, 93,000 Hulkamaniacs running wild. I mean,
Did you go to that?
no, but I watched it,
watched it,
Joel. I
okay.
couldn't go to that, but anyways, unbelievable. You know, just the events back then. But I mean, yeah, there's still hardcore fans. I mean, it's still
Come
got,
on,
a good
man.
following.
Tables, ladders, and chair matches with Jeff Hardy. Come on.
I don't even know
come
who
on,
Jeff
guys.
Hardy is. Do you even know who
You
Jeff
don't know who
Hardy
Jeff
is?
Hardy is? The Hardy Boys? You guys don't
No.
remember 3D?
I know the
Come
Hardy
on.
Boys wrote books, I think.
The Hardy Boys. Come on, man.
Yeah.
This is real complicated. I think I'm gonna pass on the technicals on these.
You see, they know the Hardy Boys
yeah,
out there.
I'll let Triple D. I'll let Triple D crunch the numbers on this one. All I'll say is, you know, people got caught leaning the wrong way on Friday, right? And everyone that had profits all the way from 5-6 sessions ago buying into this, they're kind of scratching their head and say, "Oh, why didn't I dump this on Friday?" So. Not sure what the takeout's going to be. It's going to be a wild one. In this EDR Endeavor that's putting the deal together, this so far, I guess this is the company that's benefiting from it. For Endeavor, where are these the pair highs at 24.40. So if this is such good news for Endeavor, we're going to hold 24.40 and make our way to fill the gap towards 25.
Yeah, I don't know. I don't know if I'd be like an investor in Endeavor. I don't know. I don't know. See the upside really to UFC like I used to. I don't see it as popular as it used to be. Like let's say the Conor McGregor days. Like everyone was watching UFC. I don't think that's the thing anymore.
Again, everything was better 15 years, 20. Well, I go back 30 years ago. UFC didn't exist, but when UFC first came out, I agree. And now it's like, I don't know.
Yeah, it kind of died down.
Too much money too now. These UFC events. I had friends over like a month ago and we bought, I forget which fight it was even. But you know, we bought
take your money.
Like 65 or 75 bucks.
Yeah,
I mean,
man.
to watch the 3-hour event. They're just greedy, man. That's a lot of money to sit at home, like, you know, and just.
I mean, the wrestling events aren't cheaper, Dennis.
How much was WrestleMania over the weekend?
They're probably like $54, so it probably isn't too cheap.
I guess as everything costs so much more money than it used to, I'm just not used to the pricing of everything. Like, you know,
inflation station, baby.
Yeah, inflation.
I thought UFC was brutal, but you know what the new thing that's out there? And I'm not sure.
The slap competition.
Face slapping contest. Dennis, do you see this?
This is sad.
I can't even watch it.
What are you talking
Literally,
about?
it's
Dennis,
you and me
stand
competing.
there and I stand there, and you put your hands behind your back, and I get to slap you across the face as hard as I can.
Why? What is this? Like, where is
it's a
this going on?
competition.
Where?
It's on TV.
Like it's
I
a
don't
TV
know.
show.
It's savage. It's savage.
Is
this because we shelter our children so much now that they have to like have this stuff on TV to watch? This is exciting because obviously we very much shelter our kids now from everything. I mean, is this an offshoot of it that people are just attracted to violence even more? Because I mean, even the movies now, like I feel like it's all like violence and stuff. Like
that's just how it is, man.
We had violence back in the day. Don't kid yourself. Commando was a great movie. They're pretty dang violent, but I don't know.
The savage stuff out there. Be careful out there, team. Be careful. Definitely the world is savage. That's for sure. All right. In a few minutes, we'll be getting into, of course, Market Structure Mondays. Tim should be with us in just a few seconds here. Sure. But other than that, what are you guys thinking overall now that we've really started to see this tech just kind of keep pushing. Is there anywhere else that could maybe start getting moving, or are you guys just still looking to see if tech stays strong?
No, I'm sitting with a lot of cash in long-term portfolio, trading market neutral. I'll post my numbers later today. I've got the show with Joel at 10, so I'll try to post them later today for the month. I had a pretty good trading month. I think I was up close to 7% in the account. I checked it part of the way through and I was 6, so pretty sure I got close to 7, which which is a dang good trading month for me when you can make 7% of your money. So again, though, that's just trading market neutral, taking advantage of little market inefficiencies. Oxy was probably a big part of my month. I was in Oxy again and again and again. I'm sure it was probably my best stock of the month. But we're just in this market environment here. It's just tough to just I don't even know where I was going with that, Mitch. What was the original question? I went on such a tangent. I completely lost my train of thought.
You can't chase tech. It's hard.
Yeah. Oh yeah, tech.
Right? Yeah.
Are we thinking
tech or any other sector? Are you watching anything?
I mean,
I'm not bullish here. That's the problem. So I'm not jumping in and looking for what to buy here. I think that the oil move just happened. Obviously, I'm long some Oxy. I think you just can't chase stocks. I mean, here I feel like if you're coming in here and looking for what to buy right now, I feel like you're doing it backwards. Where were you 3 weeks ago when the S&P was 381? If you really wanted to be buying, if you were really
the bank crisis, though, the bank crisis had them scared, Dennis.
It had me scared too. But I'm saying there's the rah bulls that are saying the banks don't matter. It's just the regionals. Yeah. And again, you want to buy now though? I don't know. I feel like
that's where it gets difficult.
Yeah. It's the same story. Every time, let's go back to January before the bank crisis started. And we had multiple people come on this show and telling me, 400, 410, we're in a bull market and we're going higher. And what happened in February? What happened? We went straight back down. Why? Because we weren't in a bull market. We were in a range-bound market. And people were buying the top of the range. You're coming in here at 408, 409 SPY. You're dang close to the top of the range. So I'm not looking for what to buy in here. Sorry.
All right.
You got Tim in the background there. Is he today?
He's in. The alarm went buzzing. I heard it in the background there. All right, let's go ahead. Let's get to everybody's favorite time for Monday. It's time for Market Structure Monday. What's going on? How we doing? Let's get to the action. The man himself, Tim Quast, is back with us. How we doing?
Hey, happy Monday, guys. Good to see you. Well, thank you. It's starting to get light in the background there, as you can see up here in the high country.
Go.
And we're leaving. We're headed down to Denver today. We've alas have to say goodbye to winter, and it's been winter.
How long have you been up there, Tim? All the winter you stay up there?
A lot of it.
Wow,
yeah.
you live the dream, man.
Yeah,
I'm so jealous of your
living
life.
The dreams, man. Living the dreams.
He lives the dream. Up at the chalet, staying up there for months on
Tim,
end.
you ever need someone to watch that place? You just holler.
I've had multiple offers. There's a queue, Mitch. So.
We're in the queue.
Sure
Put
there
me
is.
and Money Mitch in the queue.
We'll stay in the same room if we have.
We're your normal retail investors here, Mitch. We're at the back of the queue. I'm sure the high frequency traders are at the front of the queue.
That's right.
Got to get out of Canada first, Dennis.
We're hoping for some immediate or cancel orders so that Mitch can move up the queue.
And Joel, you don't have to worry. Dennis just comes over the mountain, and he's considered to be coming from Canada, so he just snowboards down.
I don't even need to get. I just snowboard the whole way there. If I can.
So Tim, was this rally the little guy, the retail guy, or the big boys?
Good question.
Well, it is a great question, and obviously it depends on who you ask. But since you're asking me, I'll offer what I can see in the data, and I think it's important for traders to understand. By the way, if you want to stay in Steamboat all winter, use Market Structure Edge, and you can.
That's what I haven't been doing.
I haven't done that in a while. So
shameless pitch.
So Joel, here we traded notes over the weekend, and there were Wall Street Journal articles over the weekend about how retail order flow, which was very strong in February, dropped dramatically in March by more than half. So if that's true, and I'm not saying it is, but let's suppose that it is, then we can't say it's the little guy that gave us this great March rally. Then there was another Wall Street Journal article, not that I'm pumping the Wall Street Journal, nor do I necessarily think that all their facts are right, but there was another article saying that institutional allocations to US equities reached an 18-year low in March. So you could look at that and say, well, then how the heck did the market rally, right? If there's less money, how come there were higher prices? And to me, there's an answer that gets to understanding how the market works, which is very important if you're going to be successful in it, traders, retail traders. That's you and me. What happens in the market? Well, a lot of the money, no matter how much the allocation may reduce or fall, a lot of money has to track a benchmark or a target date fund, and it's got to be square with those things by the end of the quarter. By which I mean that if you have, if Meta is 5% of the index that you're tracking, then by March 31st, it better be 5% of your holdings.
Right.
And it's very important to understand that. You can get in trouble with regulators if you're not there. And if you look at the underlying data, keep in mind, and Dennis, you pointed this out about large tech, but just think about this. Tesla and Amazon are part of the 8 largest holdings of the S&P 500, and they're in consumer discretionary. Consumer discretionary was the 3rd best performer. Meta is in communication services, as are a number of other stocks like that. Communication services was the number 2 best performer. Then you've got both Googles, Goog and Google, which are components. Apple and Microsoft are 13% of the S&P 500 by themselves. You add in Tesla and Amazon and NVIDIA. Believe it or not, NVIDIA is the 4th highest allocation in the S&P 500. Put all those together, 8 stocks, they're 25% of the S&P 500. So all you have to do is square yourself with the benchmark, and there's less money coming into the market, and it soars. And it's very important not to get caught out by that stuff, folks. You want to know what's going on so that you know when to take gains, not chances. One of my
Would you be taking gains now?
Well, that's a great question. So I always, this is what I did for edge users in the market desk note this morning. Let's take a look at what the money's doing.
Okay.
And if we do that, if I could share my screen.
Let's please do.
There we go.
Let's do it.
And there we are. So my visage gets older every day. It's disappointing to see myself and realize how deep the crags are on my face. So here's what I look at. The first of all, what's the big money doing? What are the general trends in the market? And this is from what I just discussed. They're pretty good. So here's the demand side, and there's the price of SPY. It shot up for the reasons that we just discussed. And at the same time, the supply side fell. So supply is short volume. And I won't, relitigate what all that is, but it's the percentage of the trading volume that comes from borrowed stock. So it came down pretty dramatically from about March 23rd to March 31st. It came down from 51.9% to 50.8%. It's still over half the volume. The market is still net short, which is kind of crazy when you think about it. And this trend line, I could back up all the way to the pandemic, and it has been steadily doing this. So diverging supply and demand will lift prices. That happens. But when levels still are above 50%, there is always the chance that the bottom falls out, even with these kind of divergences, because all it takes is for something to stop and the market can decline. What might stop? Well, all that rebalancing. If that stops, if it's finished on Friday, then trouble could develop very quickly.
How
The
often
other,
do you see turns? I want to interrupt you here just to
no, go
expand
ahead.
on this point. How often do you see turns at the end of the quarter like this? Because me and Joel selective perception here, we often talk about turns at the end of the quarter. Do the numbers show this? Do we actually often see turns at the end of the quarter? Obviously, we had the end of the quarter on Friday, which is why I bring this up.
Yes, we often do. We often do. Statistically, we've done some work on this. Statistically, the greatest changes occur at the end of the September quarter.
Okay.
But number 2 is March. And then December and June. If you were to rank them, that's what we have traditionally seen. And so I don't know. And if you look at the supply demand balance, it's not bad. I could look at consumer discretionary and consumer staples right here. I mean, it's a 30-day view, but that's a good read into the end of the quarter. What was happening? Stable demand, falling supply, but above 50%. There it is again. You look at consumer staples, rising demand just over 5, steeply falling supply, but it leveled off at 50%. The whole market is in effect net long short. I mean, it's perfectly hedged. Here, by the way, is tech. This is what did it. So that finished by looking at this data, it finished roughly the 28th, and demand began to fall. Supply came down a little bit too. It's not bad, but this is not the kind of condition that tends to lead to a surging market. It tends to mean that the market resets in some fashion. What about energy? You could look at energy, and oil's up 5% overnight on these cuts, OPEC plus cuts. Interesting timing, right? Interesting time. The Chinese meet with the Saudis, and then the very next couple of days they cut. I don't, you could think about, well, are there geopolitics involved? Probably. I look at energy and say it's not bad. It's got rising demand, and the 30-day trend in supply is down. It's still fairly high. Nothing is awesome, Dennis, but I would look at it and say, whatever drove the market up into March 31st, that is ended. And so now we'll move to something else. I don't know exactly what it's going to be. I can tell you what we look at, which is momentum versus, you could call it value, but we call it low volatility. Momentum, low volatility. Number of components, 7 in low volatility, 8 in momentum. For those either condition to be prevalent, that should be 20 or more. And so it's neither a momentum nor a low volatility market. So we'll see. I can tell you what I think one should trade, but I think there will be a change. I don't, it's not like I'd look at the data and go, wow, there's huge trouble, but it's hard for me to get really excited about these data that I see. I think supply is too high, demand is weak, there's neither momentum nor low volatility. What do you do as a trader? Well, you have to be very tactical.
Do you think we just have this range-bound market? That's what I've been calling for here. And I was calling for it for a long time, and then the bank crisis started, and then I was like, I'm kind of scared and just spooked. But now it just seems like the banks, you're not talking about them as much. Can we just be in a range for the foreseeable future here?
Well, it's possible. And, we've talked about it. You've talked about it. A lot of people, Mike Santoli on CNBC points out that really for 200 days, the market has been in the same range. You could even go all the way back. A year ago, we were pretty close to the same levels. So in a sense, yes, that is absolutely the case. What I always point out from a market structure standpoint is that a perfectly balanced market. So if we were at 5 and short volume was at 50, the market would decline. Why? Because there's intermediation. Now it's only in tiny pieces of pennies, but that's how Citadel made $16 billion last year. About a tenth to a hundredth of a penny at a time, and that will slowly erode the market over time. So why has it been able to hang around in this range? Well, I think it's the combination of 3 things. One, there's this continuous rebalancing. Are you more exposed to equities, more exposed to bonds? That helps. There are surges of momentum as things devalue. That helps. And there are inflows and outflows. There are people's 401ks, there are required minimum distributions. And those things, maybe there's a slight bias to money coming in versus money going out. The 3 things put together keep the market where it is. If any of those things change, then I think the market declines. I'm not neither negative nor positive on the market.
What about the financials? We were
Yes.
talking last week. We're like,
Yeah.
oh, the financials.
Right.
How can the market go without the financials? And boom, it went here. I don't know if you want to do an individual bank stock or whatever,
Sure.
but I'm just, just curious about the market structure here
The-
for some of the financials.
Well, interestingly, the very best momentum stock in that momentum portfolio up there, which math just finds. It's a bunch of rules, and the math searches for it and furnishes it every day. By the way, on Friday morning, that portfolio jumped from 5 to 10. So we knew that there would be a brief burst of momentum, which there was on Friday. But then when the data refreshed, really Saturday morning, we could look at, well, now it's dropped back down. So I don't expect that burst. But look at this. So this is Truist Financial. And it was caught up in this bank crisis. You can see it right here. Demand had been at 5. All of a sudden, it got shorted heavily right here. So then the price comes down. Everybody covers right in here. Short hedges put back on following March options expirations. But look at the demand. So demand soaring, supply is falling. That tends to produce gains. Now, it might only be for 2 or 3 days, but it's very probable that one could get 2, 3, 4% in that. So is that a good indication of the condition of banks? No, I don't think it is. But you could look at that and say, well, Truist at least looks good for the short term. Could we draw any broader conclusions about financials? Well, not from the current data. But do I think that this problem is over? Well, nothing's changed. There's been no change to the balance sheets of banks that have problems related to the difference between long-term, low interest rate investments and shorter-term, higher interest rate obligations. That is not a good combo. And I think as this always happens, you have a couple of canaries in the coal mine, like in 2007, the 2 Lehman hedge funds that failed that had exposure to mortgage-backed securities. And we all went, I don't know what that was about. And then a year later, wham, the whole thing hit, right? So is it going to happen that way again? I don't know, but I don't think the banking crisis is over. And I think we have to be aware of that.
All right. Like always, you guys see this right here on the right-hand side. That's Market Structure Edge, of course. Check it out. Get your 2-week trial. Actually, you can get I think up to a month now. Just look down below. Look down below in the description, guys. Click that link. Go ahead and get your 30 days. You don't even need a credit card to check out the program so that you guys can see what Market Structure Edge has to offer. We'll have you back on next week. Always appreciate you, Tim. Enjoy that weather out there.
Have a good week, guys. Good to see you. Thank you.
Take care, Tim. All right, let's peek into the market, and let's also do a little review because Joel and Dennis have a very special day today for us. Like always trying to have a little something extra pre-market prep up its sleeve. How's the market looking, Joel? And what do you got for us coming up in like an hour or so?
Yeah, a little over an hour and 7 minutes. We're in a tight range here. We're holding over mid range. I'm just that close for Friday is just staring at me in the face. That close was 37.75. So that's the bogey. Strong close on Friday. Boom, get over that and things open up. The daily resistance is very limited, but I'm very excited. I finally got Dennis to work more than a couple hours a day. And we're going to talk inflation starting out right with Angie Setzer. She's really got a good thesis on, at 10 o'clock on premarketprep.com. Angie's going to talk inflation with looking at the commodities, the raw prices. That's what we need to look at, right? Todd Gordon's going to do his analysis. Gene's going to join us in video, and he's going to talk. He's kind of been a little underinvested in one fund in this rally. Craig Johnson, who everyone loves his calls. Michael Houston from across the pond. Listen up, mates. He's going to be joining us. And Blue Putnam. And I think if you want to stick around for some fireworks, maybe you should come out around 11:45. Well, if you're not there for the whole thing, you're missing out. When JC Peretz comes on at 11:45, and JC, he doesn't sugarcoat anything.
The biggest bull of them all.
Yeah, it should be fun to
He's
have.
bullish, man. He is the biggest bull of them all right now. I was tweeting with him over the weekend. He's like, we're in a bull market. And you know what? He's been right here. The last few weeks have been right.
I mean, we're not in a bull market. Let's just be honest. He
will fight you. Don't say that to JC.
Don't say it
He will
JC.
tell
That's
you
not-
we're in a bull market.
I mean, the price action is bull market. Let's just be honest. Bull market has a certain definition, right? It's technically defined.
Well,
I'd rather go
technically,
with
they would say the Qs have entered a
definition.
bull market because we're 20% off the lows. So they'll
Yes,
argue
that's
on
what
the
it is.
technicals that the Qs
That's what it
are
is.
in a bull market.
20% off the lows is what's important.
Qs
That's-
did that. The Qs have done that. The
that's
Qs
what
officially
matters.
entered bull market according to the stats. And you know what? I won't argue with the Qs. The Qs are in a bull market. You can
That's
see
what
that.
matters, man. And we'll see what happens, like always. But definitely, I wanted to give you guys the link there. I came prepared. I got you, Joel. There you go.
Yeah, I was
You
just
guys-
digging for it. I forgot
got you, Joel. Come
Cameron
on.
Dawson too is going to be coming on. Cameron.
All right, so this is what I want you guys to do. Don't even wait. Right now, you guys see that link in the chat right now? Click it. It's going to open you up a new link. When you get to that new link, this is what I want you guys to do. As soon as you get there, you'll see live in 63 minutes. You'll see a little bell to the right-hand side of that. It says notify me. Click that. Now you'll get the notification on as soon as Joel goes live, so you don't miss out on not one, not 2, 3, 4, 5, 6 great guests that will be on today. Of course, market outlook for Q2. Don't miss that with Joel Alcon and Dennis Dick coming up. All right, let's get to the action. We'll be wrapping up here.
We got
We'll go
Macy's
to Trade
popping
Zero.
off here. Let's go to
Macy's
Macy's.
popping?
Yeah,
All right,
Macy's getting an
I'll
upgrade.
do it with Trade Zero here. Let's
do
into it.
Trade Zero, and
we'll-
then we'll see the Macy's.
Exactly. Let's do that. Let's get to our Trade Zero segment today. All right, Macy's with a move here. Nice little pop there. I'm looking in the details right now, of course, using Benzinga Pro to find out why this is popping. Looks like we are at a pre-market high. Morgan upgraded Macy's from neutral to overweight, raising the price target from 28 now to $29. Not the biggest raise of the target price.
29?
Yeah, you get what I mean? Like, that's not the biggest raise of the price target, but it is an upgrade, right? From neutral
Upgrade
to overweight. Yeah.
All
you
these
guys
are
see
so beat up. I mean, if you think we're rah bull, the retail stocks are way oversold. So
Yeah.
the trends are awful. They're all sitting on the lows. But you know, you got life last week with Kohl's. We talked about that. I'm still long Kohl's with the CEO buy. Now you get an upgrade for Macy's. There's obviously
was it UBS last week that gave the negative on retail?
I don't know. I can't remember
I'm
that.
pretty sure it
but-
was UBS.
Yeah.
But they
Gave some
are
analyst
so
ratings.
beat up, some of these stocks, and the valuations are attractive here. I mean, it's just a matter of, do you really think, if you think that we're coming out and we're going into a rah bull market, these retail stocks are all buys.
I
I'm
think
still somewhat concerned that we're not through the worst part and a recession could still happen here. So
Yeah,
I'm somewhat
exactly.
cautious. I still own a piece of Kohl's. Didn't add to it. It actually looks not bad to add to it. If you wanted to take a shot on the Kohl's, you got the double bottom from the last 2 days of 22.82, 22.91. I mean, it's there. That's your number to lean on. Macy's has been murdered. I mean, the stock trades. I don't know what the P is on Macy's, but again, if we're going to recession, these earnings can go negative. So you just got to be careful just looking at low PEs. But these retail stocks are really beat up, man.
Yeah, we talked about this last week. Someone and it just talked about that whole $16.50 to $17 area that the big boys had stepped up back in October. That's history now. To me, 19. We're still 90 cents away from that. That's a big resistance area. That's where the bulls got to get it through and start to work their way back up to 22, 23. The top of yesterday's range, I don't know if you're going to get a look at that, but that's where I'd maybe look for about 1764. So nice pop in Macy's.
All right, we'll see if we get back there towards that hourly level. Let's keep going. Let's get to some of the stocks that are on this list. And there's some different kind of therapeutic stocks there. I'm not going to talk too much because definitely no expert in the therapeutic
They're
stocks.
tough. Yep.
Oxy, of course, showing up there. Of course, that's going to be into play. ERX here showing up here. This is energy 2x leverage bull.
All oil stocks in this
yeah,
thing.
a bunch of oil stocks just showing up left and
littered
right.
with oil stocks. which we know
USO,
why.
right? I mean, we know exactly why, right? These stocks are definitely moving. What I think is surprising, and we didn't really talk about it, was the XLE, because the XLE was down looking like it wanted to break. And then now you're getting this big bounce off this trend line, off the bottom area. So now it's looking like it wants to come back towards the 90s.
But you're
we'll find out.
86, so now your risk reward 75 to 86.
You're in the middle.
You're getting towards the top of the range, and you're chasing here.
It's tough.
I think you got to wait for a pullback now. Just my opinion.
I kind of agree with that.
I like oil still going forward here. I don't think we're in a deflationary environment here. I do think that energy prices are going to continue to probably go higher here. So I like oil, but I don't like it today. This is a huge move here. I just don't buy. This is one of the biggest moves in oil that we have seen in years. This is a big one. Just out of the blue. When's the last time we had a 4% up move in XLE overnight? When's the last time we had the oil USO trading up 5-6% overnight? It's been a long time.
The last time the OPEC did cuts. I mean, that's
good news, but I think you got to wait for a pullback now. And they might continue. I mean, and again, at a certain point, like if Oxy, we're still in a trading range here. If Oxy gets up to that 70, I may sell it and then try to re-get, because it's worked for us so many times before, this 58 to 60 and then selling it higher. So I think, I'm going to hold on the Oxy today, 66. It's been a good trade, but I think this could be some more room to the upside. So maybe I'm holding some of these names, but if you're a short-term day trader or short-term swing trader, it's a pretty good opportunity to sell into. Book some profits. I won't argue with you if you're taking some profits into this.
Yeah, I mean, look at your targets too. I mean, that's one thing. You get these outside move. I mean, let's see if crude is $1.69 off its high. There's a lot of air in here. So right now the battle's at $80. But I mean, if you don't think this thing's going to have 50, 60, 70, cent rips either way, I don't know. We'll see if it could close over 80 and make a sustained bid there. But 66.50 looks like a good number, Dennis, if you're thinking of lighting up in the Oxy. What else you got for us, Mitch?
Yeah, let's keep it going. There's not too much on the up move here. So let's go. Let's take a look at the down, see if there's anything that shows up for us, that stands out for us there. Definitely seeing some companies down here. We got SCO. That's, of course, the negative. Oil. WWE, of course, showing up. We've talked a little bit about that.
One. I don't
PDD taking a hit today. That's an interesting one that's showing up here. What do you think about China Tech? PDD taking a pretty hard beating right now.
We've run a long ways. I mean, again, we're still in a range-bound market, and Alibaba itself up 25% in 2 weeks. I mean, these are huge gains. So I still think we're in a trading environment where, we talked about the possibility of China catch-up trade. Well, it caught up. So, I mean, yeah, if you're in those trades, it's probably time to, ring the register. PDD got beat up after the earnings and never really recovered. So it's a little bit of a different story. Yeah. But, you look at, all of them, Baidu had a huge run. Baba.
There's a story too, right? There's developing here, right? It's all about spying and China apps. So all China apps right now are being kind of reviewed for if they do spying for China. And this is why PDD is taking a beating today. You'll see a headline that we talk about it. Is Pinduoduo the next TikTok Chinese app accused of spying on users? So be careful with any name that has some exposure with something this, right? I would really be careful right now, especially as regulators are trying to go after TikTok right now and try to get them to sell certain parts of their assets and things to be, heavily regulated there so that there is no spying from the China government. I would be careful with stocks like this.
And they're talking about the balloon all weekend too. I mean, it took military information, the Chinese spy balloons. So we still have a lot of geopolitical risk with China overall as well. It's still there. Didn't go away.
And interesting name on the downside in tech is Meta.
It's just had an incredible run. I mean, made the high of the move yesterday. I don't know. Forget about that gap fill or whatever. Now that you backed off 224, actually, the big tech right now is telling you, to lay off a little bit. They're all traded down after Microsoft, Google, Amazon. Let's just look at Friday's low. You're $3 off Friday's low in Meta. I mean, how can you get concerned about it going down until it takes out Friday's low? I will use that.
The trends are still here.
Yeah, 1194 was the high close of the move. That was on Friday. Good volume on Friday too. So, man, these things are. This is one of those back and fill days, right? Like where the resistance is. The close on Friday. The hype. the pre-market low is still 10 handles away, but there's just didn't get low enough to the daily pivot overnight. But we'll see. Tight range overnight, Dennis. 15 handles.
All right, that's going to do it for our TradeZero segment. Of course, you guys can keep up with everything that TradeZero does and check out their short inventory. If you guys are looking for shorts, looking for some locates, definitely check out TradeZero. They have an excellent advantage in that. I'm going to throw up a link here for you guys to go ahead and, of course, get the TradeZero Zero Pro program for 3 months for free. And let's go ahead and wrap up. Any final comment, boys, before we get out of here?
Chop. And obviously, we're going to do the preview here, the second quarter preview with Joel at 10 o'clock on the premarketprep.com site. But bottom line, I still think we're still in this trading environment here. Don't chase. I mean, it's very few environments, and I keep saying the same things on the show because this is what works. There's very few environments where chasing actually works. In 2020, when a lot of people started, unfortunately, chasing was working wonderfully. People learned bad habits in 2020. You've got to break those bad habits. Chasing rarely works in trading and investing because it gets you really bad prices. Don't panic. If you like stocks, you usually, especially in this environment, get another shot. There's usually a pullback, but you've got to stay convicted with your call and actually buy on the pullbacks, and that's the hardest thing to do. I mean, 3 weeks ago, they were telling us in January, we had multiple people how, stocks were rip-roaring higher. Well, we got the pullback in February and March, and, that was the opportunity. I didn't take advantage of it in the long-term account. Obviously, I was concerned about the banks, which, maybe I'm wrong about. Maybe we are through the worst of that. Maybe JP Morgan is correct. But I still think you're going to get, I don't think we're rip-roaring and rallying right to the new all-time highs. I think you're going to get opportunities on pullbacks.
Up in January, down in February, back up in March. I mean, could it just be one of those years where, up a month, down a month, up
Yes.
and that, I mean, that's what we're looking at right now. We'll always, be focusing on, the closing prices, but strong end of the quarter, the bulls could really, they're already in control, but another day. Let's see if we can clear that close. I'm going to hop here. Dennis, I sent you the link. We'll connect in a little bit. And
we'll see you guys in an
looking
hour.
forward to talking to the experts. So everyone have a great day. We'll see you at 10 o'clock.
All right, team, I'll get the boys out of here, and I do want to go ahead and play a little bit of a trailer that Pre-Market Prep made for you guys to let you guys know what you guys coming up, and definitely I'll throw up the link one more time. If you guys haven't done so already, definitely get your link ready so you guys don't miss out on the experts that are going to be coming up. It's starting up in just about 51 minutes here, team. So I'm going to throw up the link one last time. Any final comments, Dennis, before
No,
I play
chop.
for you?
I think I'm looking at, taking profits into this. I think tech could cool off for a day or two here. I do think there will be buyers again. I don't think this is the end of the tech rally. It could be a little bit of a turning point, but you get back to 280 on Microsoft. That's where it just broke out from. It's logical to retest that. So it's $8 down from here. So there is opportunities here. I do think you're going to have the buy the dip mentality in tech. So I don't think it's going away, but I don't want to be, I think you need a couple days to cool off here.
Yeah. Can oil hold this up?
Probably not. It's just so small. I mean, and again, the S&Ps are trading down because a lot of tech is pulling back here. IWM is, outperforming a little bit here this morning. Got some energy names in there as well.
Yeah.
I just don't think we're going to run on oil. As much as this market was rallying without oil, this market is still driven by mega cap tech. I mean, to Tim's point, 25%, those top 8 names, that's what drives the bus. Tesla's not helping the S&P here today with being down. Actually Tesla's bounced though. It's only down $5 here now, so it is bouncing. So you're already seeing buy the dip mentality there. There's still people who want to invest in tech, so you will see some dip buyers coming eventually.
All right. Have a good one, Dennis. Go do what
Thanks
you do best, man. Get to your trading action. And you guys check out, of course, the pre-market prep special today. I threw up the link multiple times there for you guys. I'm going to play the trailer and get you guys over to live trading that's coming up next. We still got live trading. I'm ready to get after it, see what I can get into today. Of course, still got a little bit of Unity and some Cleveland Cliff, little steel action. You guys know how I like my steel. Find out what we get into today. Zunaid, Lord Ryan, and I. Let's see if we can get some money today, guys. We'll find out, and definitely check out that pre-market prep special.
Up in January, down in February, back up in March. Who knows about April, May, and June? Join us on Monday, April 3rd from 10 a.m. to noon as we run our Q2 preview. Angie Setzer talking about inflation. Technicals with Todd Gordon.
And I'll be there talking about the chop, because that's all we had in the first quarter, and the second quarter is going to probably be more chop. But we're also jumping to Gene Munster with his fundamental analysis, Cameron Dawson with her macro views, and Blue Putnam, chief economist of the CME.
Michael Houston will join us from across the pond to get a European view. And to wrap things up, JC Karatz, he won't sugarcoat anything. Click below to join April 3rd. Mark your calendar, 10 a.m. to noon.
Be there.
Be there, team. And I'm going over live trading. See you guys in just a couple seconds.